G'day folks, welcome back to another update for gold and silver. Now, new highs have been broken past our previous resistance, but just be careful, there's still a bearish divergence in play. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also reference the +1 videos for a deeper dive into some of the trading strategies that we cover in this video and others. In terms of the outlook, both gold and silver have recently pierced record highs driven by expectations of US rate cuts, renewed geopolitical tension, notably US-China trade war sanctions, and sustained safe haven demand. Gold benefits from central bank demand, monetary hedging, and lower real yields. Silver adds additional leverage via industrial demand in clean energy, electronics, and constrained supply. The main risks for both are resurgent US dollar and stronger than expected interest rates, which could raise the cost of holding non-yielding assets. Silver is more vulnerable to demand weakness in industry and speculative pullbacks. In a scenario where geopolitical friction intensifies, this would tend to reinforce safe haven flows, favouring both metals, with gold acting as a stabiliser and silver offering more asymmetric upside and downside moves. All told, gold is consolidating at elevated levels with moderate upside, while silver looks more aggressive, but comes with high volatility risk. So looking at gold firstly, on the weekly, the price is very far above the moving averages, and we've drawn a bearish divergence here with the CCI now on our last video. That's risen slightly from that previous point, and likewise on the price, that's also risen. Now that's still a bearish divergence with lower highs on the CCI versus higher highs on the price, and in which case we then have to adjust. If it does pull back from where it is, and no sign yet of it pulling back, we'd have to readjust that target range, and that would be readjusted back to, that'll be probably down to that low there. We have to then move that to that 23-38% range of Fibonacci if it was to retrace as a minimum. And more than 90% of the time, it does hit this range when it starts pulling back. And it can do one of three things. You can either just touch it and bounce, so you can consolidate in that period for some time before deciding where to go, or can fall right through. So we don't know what it's going to do, but that's assuming it starts pulling back. We can expect it to reach that range 90% of the time at least. So on the weekly here on this chart, bullish momentum but bearish divergence. So just cautiously bullish at the moment. Now on the daily, it's broken up through this previous resistance we had, and we're going to raise that resistance to this new level now. We might see a bit of a pullback from there possibly. You can see there we've got a bearish divergence as well on the CCI, lower highs versus higher highs on the price. That's a bearish divergence as well on a daily. And if we were to draw a Fibonacci on this one, we'd go from that new high, let's take it back to the significant low. And a significant low meaning, I like seeing the moving average band. You can see here it's been consolidating for a number of months actually. I like to take it back to where the moving average band was starting to curve down, and it happened to curve down there. We could have taken it to that point, but not much of a difference in terms of the Fibonacci range. And if I then move that target range to that point there, that's our new 23-38% Fibonacci range of a target. Again, it's assuming it continues to fall from there, and that's a bearish divergence. So I'll keep an eye on that. And lastly, we look at the 1 hour chart, and we always look at the 1 hour as well for any micro moves. By the way, the daily is bullish as well with a bearish divergence, same as the weekly. On the hourly, what we're looking for here since our last update, here we did have a bearish divergence versus the price, and it pulled back, hit our target. You can see there what I meant by consolidation. And this would have been this little divergent range, and that was drawn from there down to there. And you can see there where the moving average bent down before that divergence started. And it hit that 23-38% range beautifully, and then it bounced out of there. Now, I don't trade these divergences. In other words, I didn't go short in this period. I only go in direction of the higher time frame. So here the daily is moving long, so I only take long positions. So just be aware of that. I don't trade these divergences. In this case, if I'm going long, I look at the divergence and I get ready to exit the trade as soon as I start seeing a move to the downside like I did here with the moving average band curving strongly down. So the hourly is currently showing bullish momentum with the price and the CCI broken above, But just do note, it's not a bearish divergence, but notice the CCI is dropping off more than the price is. Normally you want to see the CCI moving in tangent with the price. And now if we go to the back test, and here we've got the daily. Again, we only take long positions from this point, and that's marked here on the 1 hour time frame. And what I've done here, I've got a few average downs whenever the price does retrace. I average down during that period. And the way I trade this is when I let it go on the daily, at the very latest I close it out when the daily hits that moving average range. So you would have got out the first time on that candle there, which also corresponded on the 1 hour period here before that drawdown started. But the very latest as well, we also look at any divergence on the 1 hour time period. Now I like to zoom out here on the 1 hour chart, to see a particular turn down of the moving averages. Whereas if you zoom in too close, sometimes you're a bit blinded by what's, the bug on the windscreen, so to speak. So I like to zoom out, and if I see a downturn in the CCI, as well as you can see there the moving average on the price kept rising, and whereas the CCI started showing a bearish divergence, and that's where you start getting ready. But during that period, you would have just let it give it time to breathe with this average down. Give it time to breathe until such time it actually starts curving down more strongly, like it did there, and that was in tangent with these bearish divergence. The price then made a bit of a move to the upside again. Again, notice here, had a nice move on the CCI as well, but then we had a drop off on the moving averages, on the CCI and the price. Avoid going long and start taking long positions from that point, and so on. So at the moment, you'd be in a trade with average down of one position at the moment. Next, we look at silver. Now on the weekly for silver, similar to gold, it's broken to new highs. Now notice here, we've got a higher CCI from previously, and that's still slightly lower than that peak there. So that's still a bearish divergence on the weekly versus higher highs in the price. So again, bullish momentum, but just be cautious. It is showing a bearish divergence on the weekly. As soon as that CCI draws higher than that previous high, we're going to invalidate the divergence. Likewise, on the daily chart, we had a resistance here, and that's moved to that new high up there. And likewise, now here we've got a new peak on the CCI, and that's higher than that peak back there. So we're going to invalidate that divergence on both the price and the CCI. So there's no divergence currently on the daily. Notice as well, the CCI and the price are both above the moving averages, so taking long trades if you're trading on the intraday. On the 1 hour chart, again going long only, first thing we look at is working backwards. Notice here, we did have lower highs on the CCI versus higher highs on the price. And as it usually does, it pulled back. Now let's see what it did. Now here we'll take it back to the significant low. You can see there before it where the moving average band curved down. Even though the price broke down here below the moving averages, that moving average band is still somewhat in an uptrend. That's why I like to take it back to the significant low where those moving averages broke down, and that would have been at that point there. So you can see there the 23-38% range was penetrated very quickly, broke below to the 50% range, and is currently fluctuating in that 23% range. And that's why I choose the 23, because it is a common area for the price to break whenever you see a bearish divergence. So again, this could go either way. Currently, it's broken slightly above the moving average band on the price and also the CCI. So in line with the daily trend, you'd be taking long trades from here. Now, if we go to the back test, again marking it here from about the 28th of August, indicated here on the 1 hour chart. Again, letting it go on the daily, and with the very latest, you close it out when the daily hits that moving average range, and you don't take trades, and you open up trades again on the 1 hour time frame when that daily breaks above and the price is above the moving average. But also, so you're looking at two charts here. So that's the latest, or the very latest you would get out of a trade, or then start trading long again. You also look at the 1 hour time period as well. Again, paying attention to any divergence. You can see there's a few little bearish divergence within that range there, and you could have gotten out a few of those points there whenever you see a bearish divergence and taking your profits, and just to avoid risk of a strong downtrend. At the very latest, you would have got out there when that bearish divergence played out. You can see there the CCI, the price moving averages started to bend down more strongly. Another long position there, bearish divergence, get out of it about there, and that would have avoided that drawdown. Go long again there, let it go, possibly get out of that trade there, go long again there, let it go, get out of the trade there, go long, and so on. And at the moment, as we said, you would have been going long during that period, and you would have noticed this bearish divergence, and you would have got out of it as soon as you started seeing probably on one of these candles there. And in this case, according to the strategy, you would not have entered any trades there anyway. Each weekend we do a bullish share scan, so bullish blue chip stocks across 7 regions of the world, 6 or 7 regions, and we do some trades, take some trades there as well. And these are some of the trades we executed since around the 21st of September this year. And the last one we did was we sold Pepsi a couple of days ago, just after a few days of trade. You can see there the returns made, allowing for any currency exchange, and because I'm in Australia, that's converting the currency to Australian dollars, so this is the Aussie dollar amount. But you can see there they all made a capital gain with the exception of Raytheon and Tesla. So again, and that Tesla stock also returned a bit of a positive with currency exchange. But otherwise, you can see there the total return made in less than a month actually. So if you want to get access to the bullish shares on a weekly basis, subscribe at least to the Patreon page, where I publish those to my Patreon subscribers and help support the channel as well. Thanks for watching. Hit that like and subscribe button, and I'll speak to you in our next update.